Hey, what is up everyone? It's David here. In this video, we're going to do something different. I'm going to rank my growth stocks that I've invested in from good decisions all the way to really poor decisions. And I'm hoping that by the end of this video, by me sharing my thought process and also my reflections, you can learn from some of my mistakes. As usual, if you do learn something new, it will mean the world to me if you could gently smack the like button right there. And no, this video is not financial advice or recommendation to do anything. So without further ado, let's go. So the way this is going to work is I have pulled out all of the different icons of businesses that I have invested in that belongs to the growth category over the last 12 months. Now, the reason why I chose 12 months is that I've only started to manage my portfolio actively for about 12 months. I am going to categorize my decision being a great decision, a mediocre decision, to a bad decision. Now, the main difference to me between a great decision versus a bad decision is that, well, firstly, it has to be a great business overall. Like, if it's not even a great business, let's not even worry about the price. But given that it is a great business, you can always overpay for a great business, right? So part of it is actually being aware of what's happening on a macro level, because if bond yields tends to shoot up, that tends to impact growth companies with no cash flow, no earnings. So I have a few tough lessons I want to share on that part. And I think a mediocre decision is that I paid a decent price for a great business and I might have gotten lucky. If I've gotten lucky, then it's less about skill, but more in terms of being in right place, right time, which could be argued that is a form of skill. But for the ones that I did get lucky, I have bucketed them into a mediocre decision. So I want to remind you that I am coming from the perspective of when I first started allocating capital into these companies, right? Not right now. I'll still make some comments about right now, but with Disney, I think that it was a great company and I paid a great price for it. When I first started accumulating Disney, it was somewhere around here. And the sentiment was so negative after the pandemic crash, mostly because a big portion of Disney's revenue comes from theme parks and also cruises. If you can't travel, it's going to impact Disney's ability to generate revenue. So that's fair. But I think what was really discounted is their ability to grow their subscription of Disney Plus. I don't think anyone can argue that because Disney owns Marvel Studios and also Lucasfilms, their ability to create more series and repurpose a lot of that content into theme parks, rides, even toys to monetize that content is second to none. So from that perspective, I really like Disney Plus, not to mention that Disney have a joint venture with ESPN. So there's definitely diversity when it comes to content. So from that point of view, Disney is definitely a great decision for me. Now, Hims was a bad decision for me. Firstly, Hims is a telehealth company focusing on very, very sensitive issues for both men and women. For men, it's a lot about hair loss, PED. We can laugh about some of these issues, but because I've worked on a company very similar to Hims in Australia, these problems really impact relationships and it's a very big problem that people are willing to pay money for. What I got wrong with Hims is that I had no macro awareness that when the bond yield started to go up, these companies with no cash flows, no earnings were going to get absolutely smashed. And rightfully they did. And part of the other issue with when I did analysis on Hims is that I compare Hims with other similar type companies. Well, if you're comparing an overvalued company with a bunch of other overvalued companies, then even though you might be getting a discount from Hims, that's not going to help you and it's not going to provide the upside as a retail investor. So macro awareness was the key that was missing for me. And that was one of the critical mistakes with Hims, that I was just not paying attention to bond yields. With Sofi, I think it was a mediocre decision at best. Sofi is essentially a fintech company and their whole value proposition is that they enable the next generation of investors to buy, hold, and sell stocks or ETFs brokerage free. Very similar to Robinhood, except they also offer mortgages and also the ability for big enterprises to issue out bank accounts or even debit cards. When I first started allocating capital into Sofi, it was still in a SPAC mode. Bought in at around $12 and within a month, not even a month, it shot to around 25, 24. That was not sustainable in my opinion. I think that was way too sharp, way too quick. So I quickly closed the position because I have no idea how long that was going to last. So that was, I think, both a luck and just a mediocre decision at best when it comes to Sofi. With Zoom, I still think it's a great business that's currently being underestimated. Just because they had a tremendous few years, it doesn't mean that they're going to stop growing. And I think the new drivers for growth really is Zoom heading into enterprise with Zoom phones, not to mention the suite of tools that's going to be built around Zoom. I think it's a mediocre decision at best for me is that I paid a decent price for a great business, but what I was unaware of was the macro environment. I had way too much growth exposure when bond yields were starting to go up, and that really hurt my portfolio. As a way to consolidate and basically manage risk in my portfolio, I ultimately closed my position in Zoom. I didn't feel that good about it, but I think it really is a mediocre decision just because I had very little macro awareness. So definitely a mistake on my part. Now with Shopify, even though I'm currently sitting on a gain, I think that it's a great business that I paid a decent price for. Now the reason why it's not a good decision just yet is because I think that the price I paid for is not the best. With Shopify, this is actually a present that I wanted for myself, and I paid approximately $1,050 for it. I've been talking about this for the longest time in my Discord server, and one of the main reasons that most people love about Shopify is that they're one of the bigger cap companies that's been able to grow at a high double digits for the last 5 to 6 years. That's incredibly hard to do. On top of that, their ability to focus on merchants and generate revenue is crazy to me. Now, right now, Shopify actually generates revenue via a subscription. So you have to pay a monthly fee if you want a Shopify account. Not to mention, they take a cut of every transaction that flows through the platform. And after that, they're starting to build a fulfillment center and also financial services for these small businesses. Not many people know about this, nor do they care. But Kevin Indig is now leading SEO in Shopify. Kevin Indig is an absolute weapon when it comes to SEO. He helped Atlassian grow their organic traffic on Google substantially. It's absolutely crazy to me. And he is like the LeBron James when it comes to building SEO traffic for another company. If that's not enough, John Wexler, who designed the Yeezys for Kanye, is actually now a VP influencer and creator in Shopify. They really care about their merchants and they really care the brand that they're building with Shopify. So for me, it was just, I really wanted to be part of this story, and I've been waiting for a very long time and finally had a brief moment that I could purchase the share at around $1,050. So that was a present for myself. And if it crosses below 1,000, it's more than likely that I'm going to add to my position. Ultimately, I think that Shopify is a mediocre to a great decision, really is in between. Honestly, I'm going to put it as a great decision for now. When it comes to BarkBox, I think it's just a bad decision on my part. Now, BarkBox is a subscription service for pet owners for both basically pet food and also pet toys. If you go on YouTube and search for BarkBox, there's tons of testimonials and also product feedback when it comes to BarkBox. I think that it's a great business overall. Their management team incredibly capable, but I overpaid for this company because I was not aware of the macro environment again. And the exact same thing happened for MoneyLion as well. MoneyLion is a US fintech company that helps the underserved population with building their credit scores and also helping them learn how to invest. I thought it was a great mission, great product. Again, because of the lack of macro awareness, I just paid too much for it. Now, Talga, I think, is a good decision from the perspective that not many people understood the importance of localizing the battery supply chain, especially in Europe. And half of the materials that go inside a battery is actually graphite. So in the current macro environment, even though Talga is not generating any earnings or cash flow, the commodity itself is going to be inflation adjusted. And because the structural shift towards EVs is so strong, I just think that it's going to be a good business. And I paid a great price at around 60 cents to about $1.20-ish for it. So great business in the future, and I paid a good price. I think it's very hard to go wrong with Microsoft. It's a great business. I paid a great price for it. They continue to grow even though it's a $1 trillion business right now. And I think I will say the same thing for Amazon as well. I think the crazy thing with Amazon is that if you go to estimates and then look at the last couple of years, they continue to find ways to grow itself in high double digits. And more importantly, if you look at the valuation, it's currently trading at a forward 20, not even 21 times EV EBITDA. And if we stretch the time frame to around 5 years, it's a little bit below the mean at the moment. And you can see that this period, when the revenue was growing really quickly, it pulled down the forward multiple. But as it stands, I think trading at a 20 times forward EV EBITDA is a bit too low in my opinion. So I still think that this is a great company and I bought it at a great price. I paid approximately $3,000 and I recently added more to my Amazon position as well. And the next one is Slack. I think Slack is a mediocre decision on my part in the sense that I got lucky with this position. So Slack is a software communication company. If you worked at a small company or a startup, they are more than likely going to be using Slack. It's a great way to communicate between teams, build a community, or even store files. So my aha moment with Slack really came from, I was consulting for a startup early 2020. Basically, they sent 1 million emails by accident to their database, and that really hurt their reputation. So all of their emails was going to spam. So I was asked to fix that. Anyway, I fixed it, but during that process as a contractor, most companies don't want to invite a contractor into their entire Slack because there's sensitive information that the contractor should and should not see. So what tends to happen is that dedicated channels will be built for contractors to invite them in. And this is the first time that I paid for Slack that I was invited into a particular channel. And in order to join the channel, you will have to pay a monthly fee. That was the first time that I ever paid for Slack. So that was the aha moment for me where if I was a contractor paying for this and if there was collaboration between two companies, you can actually invite them over on a channel and you can monetize a lot of Slack's user base via that method. That was my thinking when I first allocated capital into Slack. I got in at around 22, 23 bucks, I believe. But when Salesforce announced that they were going to buy out Slack, the share price suddenly doubled. And I decided to ultimately close that position because Salesforce is a completely different business, even though it is similar. I had to do my due diligence again. So I closed the position. I'll revisit Salesforce in the future. Overall, I think that Slack is a mediocre decision because I got lucky. When it comes to Volpara, this is another software company focusing on using machine learning to identify early stages of breast cancer. And I think that it's a mediocre decision because it's a great business that I paid a decent price for, but where are you going to go after breast care? You know, is it going to be lung cancer? And then where do you go from there? I think for me, it's a small position that I'm willing to hold on. With Novonyx, I also think this is a mediocre decision. Novonyx is going to be a battery materials producer, and they have an ex-Tesla premium attached to it. So the valuation is always going to be a little bit stretched. Not to mention that Professor Jeff Dawn, who really helped the battery research side for Tesla, is also the chief scientific officer for Novonyx. So a lot of hype, a lot of buzz. And as it stands, the reason why I put them in the mediocre category is that they still haven't shipped materials that they mentioned that they will for Samsung SDI, which is one of the partnerships. As it stands, I actually like the Talga play more than Novonyx, but I might be proven wrong in the future. Mercado Libre is another growing company in Latin America, and this is mostly focusing on e-commerce. Latin America is a very strong growing trend. And especially when it comes to e-commerce, this is like the early stages of Amazon. And when it comes to Mercado Libre, I think that it's a great business at a decent price. I think the valuation is a little bit stretched. So that's why I put them in the mediocre category. I made a tiny gain from this. I just think that, again, I have learned my lesson from the macro side of things really quickly. So I offloaded that position while I still had a gain. And yeah, it's just a tough lesson to be learned. When it comes to Twilio, this is a software company that I think is underappreciated. And I think I'm going to put it in a good decision category just because there isn't a lot of conversation between first-party data versus third-party data. And as it stands, I'll write a proper response in the comment section below of this video because if I start rambling on, no one will really care. But we really take it for granted that Twilio provides the infrastructure for businesses to send emails and SMS and even aggregate information so that you know when to send these emails and SMS to convert the customers. So I think it's a great business that I paid a good price for. It could be better, but I'll write some proper notes when it comes to first-party data versus third-party data in the comment section below. With Ozone, I think that it's very similar to Mercado Libre. It's a Russian e-commerce play, and it's very, very early for the country, especially when it comes to e-commerce. I think that is a mediocre decision just because the company is currently not generating any earnings or cash flow. And from a macro perspective, is not going to help companies like these. But I think that is a great business that I paid a decent price for. For Porch Group, I think that is a great business and I overpaid for this. Again, very similar story to these four. And this was an incredibly tough lesson to learn. And because I wasn't aware of the macro environment, I overpaid for a really, really good business. Now, Porch Group is essentially a software business. And the appeal factor for me when it comes to Porch Group is that they actually provide software for home services companies. And these home services company can actually either pay via a subscription fee or pay via the access to customers. If these home services company pay via access to consumers, Porch Group knows what the customer actually needs when it comes to internet, insurance, way before everyone else. So that's an incredible advantage that Porch Group have, and I still think that is a good business, but I overpaid for this and it was a tough lesson to be learned. And AMD is absolutely a great business and I paid a great price for this. I added onto AMD right at the pandemic crash at around $45, but the stupidest decision on my part is to close out my position at around $85 per se because I had too much growth exposure. I don't know why I decided to close the AMD position. I should have closed other positions instead, but I did. And the main thinking behind that is that for the longest time, it was always Intel versus AMD when it comes to the CPU chips. AMD just couldn't compete with Nvidia when it comes to GPUs just yet. But over time, you could really tell that Intel kept falling behind because if you watch some of the Linus Tech Tips videos, these guys are actually sponsored by Intel and they still couldn't talk good things about Intel just because the performance was so different. And I think part of the main difference when it comes to AMD is that AMD's management is engineers. It's an engineering-led company versus Intel at the time before the new CEO came in was like an MBA-led company. For me, Intel really lost their advantage and I added into AMD as much as I possibly can when the pandemic happened, and it's still one of the best decisions I've ever made. When it comes to Square, I think it's a good decision in the sense that it was a great business. I paid a great price and the numbers right now is really skewed. If we look at Square and then we look at the estimates, you can see that the revenue have jumped pretty tremendously, right? And this is really deceiving because the Bitcoin transactions are incorporated in this revenue. So the margin on those transactions isn't that good. From that perspective, these numbers are really skewed. And I think that the valuation is a bit rich at the moment. But I allocated capital in Square, I think in the 150 to 160 bucks range. And it was a great business at a great price. And Tesla is by far one of the best decisions I've ever made. And this goes into the good category. When it comes to Tesla, I actually started allocating capital towards that $250 to around $300 mark. My average cost right now is around $350. And the valuation at the time looks good. I know that many people talk about how, they are not profitable if you take away the EV credits, but it really depends on who you talk to. My thinking behind Tesla is all around energy storage systems and all about manufacturing, not so much about autonomous driving. Even though that could be a very high margin business, I think that robotaxis is a bit far-fetched. In the sense that it will take a few years for that to come to fruition. I think the regulatory approval process is going to take some time for that to pan out. But I do think that the manufacturing and also the energy storage systems like power walls, solar panels, etc. is going to be that next phase of growth. So from my perspective, I really like Tesla. Not for the autonomous driving software margins, but really for the near-term tailwind of more electric vehicles, more energy storage systems, and more solar panels. So that's essentially all of the different growth stocks that I invested in over the last 12 months. As you can tell, one of the biggest lessons for me is being aware of the macro environment and you can always overpay for a great business. I had to learn that the hard way, and I've shared my lesson many times on my channel, and I wanted to document my mistakes as much as I can as well, just so that firstly, I can remind myself how bad of a decision that was. But on top of that, I think that there's also value for you to learn from my mistakes as well. So macro awareness really is the key takeaway for me over the last 12 months. But what do you think? What are some of the things that you don't agree with me? And what are the things that you think I could have done better when it comes to my decisions? Let me know in the comment section below. Thank you so much for hanging out with me all the way to the end. If you did learn something new, consider gently smacking the like button right there. Subscribe to my channel, click onto the bell so that when I release future videos, I can let you know. If you're still bored, I left a video on the screen that I think it's incredible to watch next. And as usual, Otto will always do the honors, and I'm gonna see you very, very soon.